Hey guys, it's Paul from Plan B Paraguay. Today we're here with Juan from ProInvest. Juan's a developer in Paraguay, so a little bit later today he's going to show us some of the developments he's working on. And before that as well, I thought we'd perhaps ask Juan some of the typical questions and concerns people have about buying a development in Paraguay.
Well, thank you for inviting me, Paul. I'm pleased to meet you. And well, I would like to share with the Plan B audience about the real estate boom here in Paraguay, so I'm ready to answer your questions.
Yeah, absolutely. So, I mean, you even just have to see the skyline here, right? And you can just see apartment buildings popping up like left and right. And in a way, it's a great thing, you know, because it shows Asunción's growing, there's construction, there's jobs, there's development. But then also, I think about this sometimes, I'm like, is there too much development? Is there maybe even an oversupply of apartments that are coming onto the market in Asunción? And if that is the case, then is this going to be a good investment down the track if your property isn't able to necessarily maintain that investment that you originally put into it?
Well, most of the concerns about the oversupply come from local people. And it's funny because we receive a lot of people from Europe and other places, and they come here. And I remember a meeting I had with one of them. He was from Spain, also doing his residence here. He invested in an apartment, not with us, but one of those. And we were walking around, and earlier that morning I had the same question. Isn't there an oversupply? Look at all these cranes here, look at all the construction. And later I was walking around this place here, Recoleta, with this Spaniard guy. The concern was from a local guy. Oh, too many cranes. This is going to be oversupplied. And I was walking with this guy. His name was Alberto. And we were walking the street here, and he was like, oh man, I can't believe this area here has so many empty lots. So it's half full, half empty. And if you look at other capitals like, I don't know, Buenos Aires, and we are not nearly that amount of supply yet. But yeah, it's a valid concern. Of course, real estate is hyper local. It's not the same having like 200 units here or having like more outside the city, like other places like Luque, San Lorenzo. So you have to invest in a place where it's the expanding job market. Maybe not most, but you see a lot of office buildings here. We also always try to have projects in these areas where the job market is expanding, where you have a lot of commercial activity, a lot of office buildings. You don't see yet, but there's a project by Sudameris Bank. They're going to build a few blocks from here, 45 floors of office building. And the project is not officially announced yet, but the architect is Norman Foster, which everyone knows is a big figure in architecture and the real estate development business. And you have to be smart about where you are going to invest. Oversupply could be maybe if like there are places where only residential buildings are getting built with nothing else around. So you're going to get oversupply there. But then you have areas like this one that have a lot of commercial office activity.
Where are we now, just so that people know?
We are now, people call this place Villamorra. Is actually Recoleta. You have Villamorra on the other side of Mariscal Lopez. But you can use that, like swap the terms, and people will understand. And some people call this Barrio Mariscal because it's like a subset of Recoleta, which is the places near the shopping mall. And we always try to do projects around this area near the shopping. It's not like we like shopping, but this area is brings a lot of people, office, businessmen, also tourists, many people that come here to work, many temporary rentals around the area, because you have a wide range of audience. So it's a matter of where you are located more than how much supply there is. I mean, you can only have so much supply in a specific area. Of course, you can spread out, but it's not the same with real estate.
So who's buying these apartments?
Yeah, well, it's mostly investors. And why is that? Is there's no market for mortgages for the end
Paraguay.
user. Yeah, the rates are very high, and this is a bad thing, but it's also a good thing because the investment you see is real money. There's no leverage, so there's no credits, no financing. It's all private money, and this leverage you can. I mean, if you are using leverage mortgages, then you can get into maybe some risk of bubble of oversupply. But you don't have that here. It's all private money, and it's mainly investors that are looking to invest in a unit, rent it to people that are not able to get a mortgage. So that's the market right now. It's all private capital. Banks, well, we don't work with them because they don't have, we as developers, they don't have products for us. They don't have products for the end user. So it's all like private held business. You buy from plan and finance with other people, with other investors like you. And I think it's a healthy business in that sense because there's no over leverage.
I mean, that's a really interesting point. Like you take Australia where it's just these huge home loans now, everything's so leveraged and it's so clear that the property market's going to crash at some stage. Just not having that leverage in the market can make such a difference. If there was a property crash here in Paraguay, we're just speculating here, like what would it look like? Do you think?
Well, when there's an oversupply or like a crash, those properties that are not in the best location will suffer the most. Like we are now in Villamorra, maybe there's a crash right now, we'll have to lower prices. But what will that mean to places like, I don't want to name city, but outside Asunción, that those are the properties that are going to, well, in any country, those are the properties that will suffer the most, and the ones that stay in a good location, a premium location, will see a few like variation in their prices. It's always like that. The ones that are not well located suffer the most, and these areas still are very limited in terms of supply and will like absorb all the demand. Once the prices are lower, all the people from outside the city will come here, and then the rents will go up again. But those properties that are located outside the city will suffer the most. So that's why it's very important when you're investing as a way of like lower your risk is invest in a good location. And it's said in real estate you make money when you buy, and that means buying cheap. If you buy like 20% below the market price, then you are covering for loss or a crash. And the way you do that in this market here is investing in pre-sale or in POSO, where you invest early and you get the best discount on a property.
Well, that's right. I mean, and like you said, someone's coming to you, they're buying something that's not built yet. So obviously they're getting a better price, but then they're taking on that risk, right?
Yeah, of course. I mean, there's always risk in this business. And you'll see a lot of developments here, and no one is getting really scammed. Maybe you'll see some building like it's going slow, or maybe it hasn't started yet, but they eventually get built. And the reason why you see many construction, well, not many, some constructions not going forward is because they don't have a good cash flow. Maybe they are not selling well, and if they are not selling well, maybe it's not a good product, a good location. As long as you are investing in a project that sells well and is in a good location, and you can tell that by how many units there are left in the project. Of course, how many projects have they delivered before that, and so on. And if the cash flow for that project is healthy, the construction is going to move on without delay. I've seen projects, maybe few exceptions, that don't advance much, but once they get their traction, the construction goes up. But there's no unfinished building around this area. At least not in the market we are in.
You mentioned that around this area. Is that something that has happened in Paraguay where construction stalled?
Yeah, sure. We had a big case, I think it was 1 year ago, but the problem was they were targeting to a demographic that didn't have enough money to buy these properties. So they tried to do end user apartments, and by that I mean they were trying to sell them these apartments to the end user, who I told you recently that they don't have access to a mortgage. So they run into cash flow problems. So it's very important what market you are selling to. So you're going to run into cash flow problems if you're going to develop or buy something to sell to someone who doesn't have access to a mortgage. So that was the problem with that case. It was a big one. It affected not only them but all the industry. But it was something like it has nothing to do with anything. They were targeting to low like low social housing and that kind of stuff.
Probably a more riskier demographic.
Yeah,
I guess.
Of course. Yeah. That's the thing.
Let's say I'm a foreigner. I've just come here. I got my residency. I'm looking to invest in potentially buy something off the plan. You mentioned just how important cash flow was in terms of the developer, right? They need the cash flow to finish the project. Is that something I can do due diligence and find out? Or is that merely I would research the developer and see a history of success? Or how would I make that risk assessment as a potential investor?
Well, we always say it's like check a project that has sold out like quickly, maybe. I mean, because they can have projects maybe built around the city, but they are not selling.
Right.
And in our case, like this building we are here right now, and we sold 95% of the units before the construction started. We start selling before like 5 months before the construction starts. The second one we started selling 5 months before the construction started, and in 44 days we had the 100% of the units sold. So the cash flow was good. The investment from the risk perspective was good. And for the one we are going to see later, 88% of the building was completely sold out at the moment that we started the construction. And for fourth project, we have 93% of the units sold out of 302 units when the construction started. And so if you see, of course, you can. I could be lying to you, right? But you have to do your due diligence, see how much units they have available. If they show you like a big list of units available, then well, maybe this is not selling well.
It's like a red flag.
Yeah, but if the project is selling well, there's few units, there's low risk of investing in that project.
That's something that's verifiable. Then what you're saying is potentially you can see, okay, this apartment complex has X amount of units. When I go to the website, I see X is still available.
Yeah.
So it gives an idea of the potential demand.
Yeah, and of course, look into the track record. You can also see testimonials, talk to other investors maybe. Yeah, but it's really up to you doing your own research.
Yeah.
But yeah, you have to do your own research, but not very hard, really.
I mean, and that's why it's so valuable to talk to someone like you. I'm like, okay, I want to do that. What specific things should I look for? One thing that you mentioned that was quite interesting, you said the development we're going to see, I think you said they sold out 88% before construction. Is there like an industry average?
No, we are out of the norm, actually. I will dare to say we are like the I won't say most successful developers, but we characterize for selling these projects before the construction, and that's a good thing for the investor, for the cash flow. But I have friends, developers that say, you're leaving money on the table because you are selling 100% of the units before the construction start, instead of waiting maybe a year or two and keeping those units for yourself and then selling these units for a surplus, right? For more money. And that's not really our business because we sell to investors that need to get a yield. For instance, when we were doing this project, First Mariscal, we had our neighbor project. They were selling, 50% more than our units, and people were like, oh, why you're selling so cheap if they're selling, like putting the price or setting the floor so high. And that's not my business. My business is sell quickly and sell and leave that like margin to the investor.
I see.
And that's very good because you get good cash flow. Maybe you leave money on the table, of course, but it's more healthy, and you have more happy customers, because if you sell a expensive apartment, that's the last time you're selling an apartment to them. So you'll see most projects sell maybe 50% during construction and at the end. But we are very aggressive with our pricing, with our strategy, and we focus on investors. But you'll see many projects that have private capital, like an ETF is putting the money from, maybe Chile, USA, and when you are buying an apartment from them, you're already paying for their return, the yield. and we are like more crowdsourced. Our investors are the one getting that yield.
It sounds like the current business model is sell what you can before. It's going to be cheaper, but at a higher risk. Then keep some aside, and then as the building's being constructed, you can sell additional, but because things have already kicked off, you can have a premium because there's less risk involved.
Yeah, and in our case, we don't do that because I could like have the apartment more expensive, but what I sell, why investors come to us is because of the yield. And if you go up in the prices, they are not getting the yield, so there's no business for them to work with us.
So I hear there's different types of investments in the Paraguay property market. There's been a few other YouTube video content creators that talk about how, particularly Argentinians, they almost see an apartment here as like a savings account, especially before Malay, their currency wasn't as stable. They literally just wanted a hard asset to throw some money at, and they didn't care if it was rented out or not. They just wanted it to be safe. What percentage do you see that's still a big percentage of the market? Because like, for example, when you walk around at night, you look at these big apartment complexes and there might be only the lights on in a third of it. So what is that? Are they empty? Is there owners, but they're not actually using the apartment, they're just holding on to it? Did you have any thoughts about that or that observation?
Well, 71% of our investors are Paraguayans.
Okay.
And 29% mostly are Argentinians, then come the Germans, and then you have like a wider range of countries. We have clients.
Many Australians?
I don't know if we have an Australian yet, but we have people from 20 countries: Czech Republic, Austria, Slovenia or Slovakia. I'm sorry, I always get mixed up. People, of course, from Chile, Bolivia. Yeah, it's true that Argentinians at some point, they were buying apartments as a saving account.
Yeah.
They didn't care about the yield.
Yeah.
But I think they are over that phase. I mean, it's different for them because they have a history of high inflation.
Right.
So they really don't think about yield, but as a saving account.
Right.
But there are other markets, like, I don't know, a German dude comes and he wants his yield because he is investing in other stuff. We have clients investing in gold, in whiskey barrels and that kind of stuff, and they care about the yield. And of course, they're going to look into that. But yeah, you have those two types of clients. Those that look into real estate as a saving account is because of desperate measures, because their country has a lot of inflation. But a normal guy, a normal investor, they are going to compare your project, your apartment unit, to some yield like a bond or S&P 500 and so on. And you have to be competitive. You are competing against those kinds of instruments. Because for us, an apartment is not an end; it's a means to an end. Your end is the yield. Right. Is the passive income, and yes, so you have to compare your business or your rental to another kind of stuff like a bond or even crypto nowadays.
I mean, good luck matching that yield, right? But so in your opinion, what would you consider to be a good yield on an apartment?
Well, like globally, you'll have like 5 to 6% is good in a good area. Globally. Here we focus on temporary rents, and the way we do that is by picking the best location near to the shopping mall, to the offices, to the restaurants, and so on. So we had a high demand for temporary rent. Like for instance, in this building here, we have around 30 units on Airbnb, and they have an occupation of 85 to 93%, and you can get a yield of 10 to 11 net yield. That's net operating income. Right. And that's a good yield. Of course, if you are doing like traditional renting, you will get 5, maybe 6. If you put furnishing in your traditional renting, you could get 7, 8. And if you do temporary rent, you get much more rent. But the location is the most important feature on your investment, and that's just yield from your net operating income, right, from rentals, and then you have the yield of the property. The property go up in price, the capital gain, and that's, we don't speculate with that. I don't know. I can only talk about cash flow, but yeah, you can expect like 2 or 3% of annual like price appreciation on your unit.
And when you say this temporary market, is that purely Airbnb, or is that also include other platforms, or?
Well, of course, you can include as many as platforms as you like, but in Paraguay, the one that works best is Airbnb.
Right.
You have Booking. You have a lot of people, don't ask me why, but a lot of people prefer Booking when traveling, mostly old people. And
I use Booking.com.
okay, well, that explains.
Right.
Yeah, well, but you will find more expensive properties. And why is that? Because Booking doesn't offer a way of you to charge in advance. It's mostly cash and stuff. So you as a property owner will lose money if the guest doesn't show up. So they charge a premium.
I see.
And so Airbnb is more secure. That they can collect the money for you and so on. So and you have VRBO, but right now just with Airbnb we get 85 to 93% of occupation. We don't need to use another platform. Of course, you have some direct bookings. I don't like taking direct bookings because you lose the support from Airbnb. You lose the insurance. You have a problem collecting the money. So even you pay a lot of money to Airbnb for the service. I think it's totally worth it.
Oh, really?
Yeah, it's really passive. And some people like, I'm your friend now. I would like to book directly. I mean, I can give you a discount, but please
go through the platform.
Yeah,
that's interesting.
it's more secure for them also. We
is.
do direct bookings with our investors because that's a way of course showing some trust in them and having them test your product, test drive your product. But otherwise, we don't do that.
Just more generally, there's people that are thinking about investing in an apartment, putting on Airbnb in Paraguay. I mean, you hear all this crap around the world that Airbnb's being banned or overly regulated, or like it's impossible to get one. Just generally, how easy is it to operate an Airbnb property in Paraguay?
Anyone can do it. You don't need a special permit. It's advised you to get a permit, which costs like $60 a year.
Yeah.
You don't need that if you're hiring a management company, as we do. It's very easy to operate. You don't need something special. It's low entry, but of course, you have to have a good unit. I will be more worried about the management than the legal part of it. The permits, that's very easy. You don't really need that. I mean, nobody's checking that, but just to be sure, go get your $6 permit a year for temporary rent, but focus on your service, on the management company, on your furnishing and that kind of stuff.
Right.
It's really easy.
You mentioned a little bit earlier the 11% yield. Would that, or 10%, let's say, or 9%, let's be more conservative.
Yeah.
Would that be using a management company, or is that the yield of someone managing the property themselves?
Okay.
Yeah.
So just before I go into that, and the way we know about this is because in every development we keep units ourselves. I mean the real estate business, developing building, but my end goal is having rental properties. And that's very good because we are very skin in the game and we think like our investors do. So it's a nice relationship there. So we keep our units and we know these yields from our own experience. I'm not speaking of some study or some platform or anything. But if you want to get this information from a third party, you can check sites like AirDNA or remember bnbcalc.com. They all rely on the Airbnb API.
Right.
And they get the information and you can see all these numbers, occupation and so on. But be aware, you have to compare properties. Like it's not the same looking at a property in Villamorra or Recoleta with another one. So you have to narrow your search, the type of property and so on. We have a lot of data from our own rentals. That's why I'm showing you the numbers or telling you about the numbers. And it's 9 to 11% of net yield for property. And it depends not only on the management company, if you are doing it yourself or you're hiring someone, but also on the type of unit. Maybe it will impact 1% if you're hiring a management company.
Okay,
but
right.
then you also have to check if it's a 2-bedroom apartment or 1-bedroom apartment. Of course, it depends on how much it costs you. When you enter the project, if it was pre-sale or a finished unit, it's more important when you enter the investment more than
I see, right.
the management. So, and you can expect higher yields on smaller units, right? Like a studio apartment. But the problem with studio apartments or the downside is like you can rent for a higher yield because it costs you less, but you are renting more or less like a 1-bedroom apartment. You don't need to go much lower if the location is good. When you want to exit this investment, it will be harder to you to get an appreciation because you will be selling your studio apartment to maybe another investor that's
Right.
looking to get a yield. So there's a balance between yield and appreciation.
Right.
So it can vary a lot, but the most important part of this is investing early, maybe pre-sale, and in a good location, and having the type of rental is more important than if you choose a management company or whatever.
Just to drill down on that, you made me realize something. So for example, someone's buying pre-construction with you, right? What's the average time for a property to be built? 2 to 3 years, let's say? Or?
Yeah, it's usually 2 years.
Okay.
Like this building took 2 years. The next we did it took also 2 years. And for the third one, it was a much bigger property. We were talking about the one we are going to see next. It's 172 apartments. And that was a real challenge because the building, of course, is much bigger, and the construction time is also longer. And I personally was very worried about this time frame of 3 years,
right?
Because all the industry standard was like 2 years, and I was thinking to myself, who is going to buy this on pre-sale if they can buy on pre-sale in another building and have it done in 2 years?
Right.
They will have to wait 1 year more. And I told my partners, no, this is not the way to go. We had to do another 60-unit apartment. But then I realized they didn't listen to me, okay? Sometimes they don't. And that was a good thing this time, because since you have a longer time frame, like 36 months for a big project, you also have smaller installments.
Okay.
So we had like a good reception. Some people that weren't able to buy on a 2-year project were able to buy in a 3rd year project, because
I see.
on pre-sale you buy during construction. It's not post-financing. So
how often is there an installment usually?
It's monthly.
Monthly, okay.
Yeah, some people that prefer, because of the nature of their business, they prefer paying every 2 or 3 months, and that's okay, as long as there's nothing crazy in the cash flow. Usually you make a down payment. Usually it's 30%.
Right.
Then you'll do 60% during construction.
Okay.
And when you get your keys, you get to pay the 10%. And that's a good cash flow. If someone says to you like, no, pay me 20% now and 80% at the end of construction, they are maybe over leveraged, or you are paying for like financial cost, or they are really desperate for your money.
Right.
Because if you ever done some construction project, your house, well, when you are doing pre-sale, you are doing basically that. You're paying to an architect or a real estate company to build for you. And your cash flow, your payment, your installment have to go with the flow of the construction. So if you leave much money at the end, then the construction or the project might have some problems.
I see.
Or it's over leveraged, or you're paying for maybe an ETF is you're paying their
Their dividend out.
Yeah.
I see. So let's say a quick project, 2 years.
Yeah.
We talk about 9% yield. So in theory, year 1 and 2, no yield. And then the 9% is 9% on the original. So an investor would have to factor in the yield they're giving up for those first 2 years as they're feeding money into the project.
Yeah, you have to take into account that during construction, you are not paying upfront.
Yeah.
So if you are going to calculate your yield, let's say $100,000 apartment, just to make it easier to calculate, you are not paying that upfront. So if you are going to calculate your yield on that investment, you really need to do the internal rate return And the ROI is very high because you are paying in installments and not upfront. So the way you do that, well, you have to do some calculation. You have to know that if you are investing in pre-sale, you are usually paying 20% less than a finished unit at the moment of now, today. So that difference makes up that offsets.
Yield.
But then again, if you really want to get into the numbers, you have to calculate the internal rate of return. It pays itself, really no problem.
You made me realize that because we have this discounted rate, that's offsetting the lost yield.
Yeah, and the internal rate of return.
Right. So you mentioned, we're going to see this development of yours shortly. What is what's the ballpark price for an apartment there?
Yeah, well, it varies depending on the location. You can expect in an area like this, the prices go from $50,000 for a studio apartment with no parking, up to $100 for a two bedroom apartment with a parking space.
Right.
And so one bedroom apartment will be around $85,000 with a parking included.
Yeah.
Of course, you have to do your numbers, but it's very important for you, if you're as an investor and you're looking for yield, to think about the yield. Some people ask me, okay, how much dollars per square meter? And I'm always try to make them understand it's about the rent per square meter and not the dollar per square meter, because you can get a cheaper apartment outside the city for much less money, but get half the rent. Maybe you spend like 20% less, 30%, but then you rent them and you get 50% less the rent, the yield, right?
Yeah.
So it's very important for you to look at the yield and not at the price of the apartment. Of course, it's important. If you are going to compare two units, think about the yield. That's the key to investing.
So I mean, at Plan B, we're always helping people with banking, right? And helping them get bank accounts in Paraguay and going through all that. Now, many banks here, to get a full US dollar bank that's connected to outside, be able to send money from, let's say, the States to Paraguay, you need to show the bank 6 months of income in Paraguay or tax returns. And that's great for someone that lives here, but what about this poor guy, he's moved here, he loves Paraguay, he's lived here a month. What do they do then if they want to get banking here to send money here and then to invest it in something like one of your projects?
I think one of the few bad things about Paraguay are banks, because of that kind of stuff, not even for a foreign people. I mean, when we started our first company and we wanted to open a bank account for our company, they were asking us for history. We needed the same 6 months.
Yeah.
And like, how can I start doing business without a banking account?
Right.
So it's like
chicken and egg thing. Yeah.
So yeah, banks are very difficult, but you don't need to open a bank account to start investing.
Right.
You do need to send money to a bank account, and they will ask you for a few documents. And before investing in a property here, before the company start receiving the money, like if you are going to buy an apartment from us, first we have to make sure you have all the documents, and that's it. First of all, you have to sign a contract for this apartment. You have to show some proof of income. It could be tax statement, bank statement, job contract, some papers, property that you have.
Just don't mention crypto, yeah?
I mean, yeah, don't mention crypto. Once you have that, you send that to the real estate developer along with your signed contract, and then we or the real estate developer goes to the bank and shows the documents. What they want is that you are proving that it's a real person investing with you.
Okay.
And that's before you even do the first transaction.
Okay.
Once the bank says, okay, this is a real person, legit income and so on, then you get the okay to send the money. And you can send the money from abroad, you can send the money from your company. If you're sending money from the company, you have to present the papers for that company.
Right.
And you don't need to have a bank account here. Start investing, and only with your passport you can start investing. But then when you are going to maybe get the property transferred to you and so on, you'll pay less taxes if you have your residence.
Right.
But you have like 2 or 3 years to do your papers before needing them. This is for Cameron here, this info. We had to do this like bigger underground level. It was very costly to do. and was very slow also because we were like excavating, digging were 4 meters, and we had to put this one here because we needed, there's a minimum requirement for parking spaces when you need to get your approvals. And I won't say the cheapest way because these are very expensive, but the most efficient way of doing that without going another 2 floors above, it was putting these elevators here. And each one cost like 3,500 from China.
And so one owner owns both spaces?
Yeah, this is exclusively for the owners of 2-bedroom apartments.
Okay.
So it makes sense they have 2 parking spaces.
Right, yeah.
And the way it works, you put a key there here and choose the direction up or down. And then you have to keep this button pressed and it goes up or down.
Do they break down often?
No, I never heard of that. I mean,
Okay.
they barely use it anyway because
Okay.
really parking is not needed. You have to make parking for the municipality, for the permits and all.
It's
But
like-
people don't really, the people renting temporary rent don't really use it.
Right, yeah, you don't see, there's not a single car
Yeah.
on any of these.
Sometimes what they do, we have like investors that rent the units here, but they keep their stuff, like maybe they race and they keep their car here as they are away or
Storage.
something. There's some storage unit also there. And what they keep there is like a motorcycle for when they come to Paraguay and such. I hate doing this because it's very costly.
It makes me nervous. I feel like I'm going to get crushed under one of those things
Yeah.
as well. So here we're at First Mariscal, one of 2 developments we're looking at today. As you can see, it's right near the shopping Mariscal shopping center, as well as the lovely park right here. So we're going to go learn a little bit more about the development today. Let's have a look. All right, so Juan, it looks like now, I assume this will be the car park, will it?
Yeah, that's one of the entrances to the parking space. We have many levels of parking. There are like 2 semi-levels to each, but it's like around 4 floors of parking and 2 more parkings
Below us?
Below, yeah.
Okay.
So it's like more than 300 parking spaces.
And so how many apartments in total is there going to be in the complex?
The complex has 172 apartments. They are from 1-bedroom and 2-bedroom apartments, around 34 square meters, the smallest ones,
Okay.
without a balcony. And then you have units from 41 bedroom with a balcony, and you have 2-bedroom apartments with 2 bathrooms.
And this is looking like it's a pretty big complex. How many floors is it going to be once it's completed?
Well, the complex has 18,000 square meters in total.
Okay.
And you have the first 4 floors of parking. Then you have a big plaza.
I see.
And then you have the tower for the apartments, and that's like 22 stories. Yeah, around that.
That sounds pretty high. Where's that in relation to the other buildings in the area? Is that taller, about the same?
It's pretty high. It's like 70 meters high, so
Okay.
it's above the shopping mall.
Oh, right here.
Yeah, the shopping mall has, I think, 8 levels, but they are tall, so around 40 meters, and we are almost double than that, 70 meters.
And so what are some of the amenities that this complex will eventually
Yeah,
have?
well, one of the most interesting amenities is this plaza,
Right.
because the land we're building on is, I think, 2,400 square meters. So it's a big piece of land, but the tower is quite narrow. So
Okay.
the rest of the area, you have a big park. That's a nice thing to have in a place like this. Then you have the typical amenities like a pool, co-working spaces, a gym, a barbecue area, and that kind of stuff. But we try not to go too crazy with the amenities because these are for rental.
Right.
And you have to keep an eye on your expenses. We just try to add amenities that will actually add value to the investment.
I see, because I guess there's a higher cost.
Yeah.
Right.
We are calculating expenses for this building around $1.15 per square meter, And if you go crazy with the amenities, it can be double that, and that's too expensive for investors.
And what I noticed, when you're in a nice apartment, you maybe use the gym once or twice and the pool, and then after a month, you're like hardly even using the amenities.
What I always tell to investors is the amenity is actually the neighborhood.
Right.
And that thing you can't buy, you just have to be there. And here you have the shopping with Starbucks and office spaces, the park, the super saves and everything.
Cinemas.
So we try to spend our money not in amenities from the building, but in the location.
Right.
Because that's the biggest amenity. You have the security, the walkable spaces. You can go anywhere by walking. That's the true amenity, not the pool in the rooftop.
Yeah, I absolutely agree. So the construction site's looking pretty busy.
Yeah.
How far away are you from completion?
Well, we started 1 year ago. We are 2 years from the completion of the whole building. So it's 36 months until finishment. I think it's at March 2027. Yeah.
And I see with some buildings, it seems like people can move in before they're even finished construction. Like, is that something you're going to do here, or will it be completely?
No, that's a problem, especially if you are renting, because some people are not happy about the noise and all. But we're going to have the parking spaces operating before the construction finishes. In fact, I think next week we are delivering the first 2 ground floors to the shopping mall who bought the first 2 ground floors to do a parking business, and they're going to operate it, and we are going to keep moving upwards with the construction. But that's a different thing. It's not an apartment, it's just a parking business.
And eventually, will every apartment have their own car park, or will it just be some will, some won't?
Yeah, we are right now in the, I think, 3rd floor of parking spaces for the residents of the apartment complex. And the commercial parking is completely different from this one.
Right.
So it's 2 different structures.
Okay. And what sort of residents will you see finding this complex attractive?
Well, we mainly do these apartments for investors that are looking to get a nice yield on their investment.
Right.
And we choose these locations because they are the most attractive for the most wide range of people. You have the offices here, you have many banks around here, and also have many tourists and people like digital nomads that look for these kind of places when they travel, because it's near the shopping mall, the money exchange houses, and they like the location. Yeah, you can go walking to La Cuadrita or Paseo Carmelitas, and that's the main target. It's temporary rentals, and we pick these kind of locations. You see there is an hotel, the Hub, then you have La Misión. It's a place where a lot of tourists and not even tourists, but people that come for work here, they like to stay in this place, and they pay good money, so that's good for investors. But we have like alliances with other companies that do the rentals for investors, and they give you as an investor a good price on your management fee. For temporary rentals, normally they charge like 20%, 25% of your income. Okay. But since we give them a lot of units to manage, they give you a big discount, and they only charge you like 10%, which is very nice, because you earn 83% more on temporary rentals than traditional renting in this type of districts, of areas. So just paying 10% of your income to achieve like more on your yield, it's a good business.
And having that peace of mind, right?
Yeah, of course.
Like, I mean, I can imagine being an English-speaking investor here. I like Paraguay, but maybe I don't understand the culture or the language so much. Just not having to worry about all that.
Yeah, these people focus on do everything from communication. They handle the cleaning and the problems. Something breaks, they go and fix it. And you have many questions from people on temporary rentals. Sometimes they don't speak Spanish, or most of the time. And they handle our investor units, but also our units. We have units in all our buildings. We ourselves are the first ones investing in our units. Yeah, it's a good service they offer. I love watching because you are a co-host of the apartment. So you check your properties and you see all the communications, and they're always asking things, and it's nice to just scroll and see the problems and see them solving, and you just get in the rent. That's nice.
So there's like a communication platform, is there?
Yeah, I mean, Airbnb shows you the communication. You're a co-host, or you are the host and they are the co-host, and you see all the communication. So it's very transparent for the investor. They take care of all of that. So it's really a passive income then.
That's interesting.
So it's all subcontracted. You know, I got into this business to get away from construction because I was an architect doing construction, and it's a hard industry.
Right.
Yeah, you to deal with a lot of problems, people, permits, and that kind of stuff. So we just oversee everything.
And these people, what is their job that are walking around in these high-vis?
Well, some of them are architects, some of them are engineers, and some of them do the fiscalización. Yeah, some people do the security. I mean, check all the security measures check if the workers are using their helmets. We are not, but okay, that's a problem right now. But that's their job, or they give instructions to the workers.
Right. And so you mentioned you've worked on a few projects before this one.
Yeah.
How many have you worked on in the past?
Yeah, well, we have worked for more than 15 apartment buildings. That accounts to more than 1,000 apartment units, and for an approximate value of $100 million.
Okay.
Yeah, so we've been on it for 15 years already, but working in different areas like design, management, and this is our fourth project as the actual developers of the thing.
15 years ago, you would have been 12 years old, yeah?
I'm actually 40.
Oh, really? Okay.
Yeah.
You're good for your age.
But I started doing floor plans, but not floor plans, but using, AutoCAD and that's drafting at 4 years old.
Really?
Yeah.
Wow.
Like my mom was working and she left me unattended, and I will go and play with the AutoCAD. And at 12, I was doing 3D, and then in high school, I was doing floor plans for other architects. And I didn't want to be an architect, but I mean, my mother didn't want me to be an architect because she said that I wouldn't make money. And she was right for a long time. But then we found our market, and we were able to do this kind of thing.
Yeah, this is amazing.
Yeah.
So you mentioned this part here is actually parking that you sold to the shopping center.
Yeah.
And that was something that you changed from the original plans.
Yeah, it was an early stage of the project, and we realized this was a great location, and we started looking to alternatives to monetize this location, other than, of course, the whole building. It was an idea I had of selling the underground floor because we weren't using any underground, and we contacted the shopping mall and asked them if they would be interested in buying this piece of ground floor land, and they say, okay, I would like to see that, and we presented a project and they gave us a go. So yeah, they really helped us with the financial part, because we were selling these parking spaces, which wasn't originally planned in the business case. Of course, it was planned then in the project with the permits, approvals, and everything. But it was cash flow that we didn't have in mind yet. It really helped us because we are delivering now the 2 parking spaces for the shopping mall, and they're paying full for it. So, and the construction is just getting started, and so it really helps with the cash flow.
So this is obviously the general public's going into this car park.
Yeah.
Is that going to be accessible to the private car park as well, or are they separated?
It's completely separate. You have an entrance for the residents, and this is exclusively for the shopping mall. Yeah, this is how the parking is going to look for all the residents.
Okay. What?
What?
Where are we standing now?
Right now we are in this commercial area with it in the ground floor and next to the lobby to the apartment building, and we are going to rent this place to some nice cafe or restaurant. We like this to be an amenity for the whole building.
Right.
So it's a 120 or 150 square meter commercial area in the ground floor. You have the plaza there, the super safe, and the shopping mall there.
Looks nice. It's a good view, huh? It's nice and framed. So this is a pretty nice apartment.
Yeah, of course.
Good view. You can see, you said La Cuadrita's just over there, the lovely trees of Asunción. So tell us a bit more about the figures of an apartment like this. Like what would it cost? Usually what can they yield? That sort of thing.
Okay, well, we are now in a one-bedroom apartment. It's 47 square meters. This unit has been renting for a year now. Well, you can expect a yield of 11–10% for a unit like this one. Usually they rent from $38 to $42 a night.
Right.
In this area. We are in this is Recoleta, La Cuadrita, and so on. And the cost of maintaining a unit like this, you have expenses for one side, which is for maintenance and the reception desk, cleaning. You have the maintenance for the pool and everything, insurance and so on. And you pay like $50 a month for that. Then you have, of course, you have the internet bills and so on. You can expect like 20% of your income goes to expenses like that. So the yields around, for a unit like this, $8,500 net operating income a year.
I see. And what would the occupancy rate be on an apartment
Well,
like this?
I have a unit like this. I have a few of them, but one like this, one bedroom apartment, I'm getting 93.7%. I checked this morning of occupation.
That seems pretty high.
Yeah, I can show you the Airbnb platform later. Most people don't believe that. And they stay for around 6 days. That's the average. If they stay like 1 day or 2 days, maybe they will check in an hotel. If they're staying more, which is usually the case, maybe they stay like 1 week or even 2 or 3 months sometimes. You talk about temporary rents and people think they're coming by the night or by a few days, but some of them stay longer. Yeah, occupation is really high in this area.
And what I liked as well when we came in, which isn't always the case in Paraguay, the guy at reception.
Oh yeah, I was surprised by that. Yeah.
Yeah.
Well, we work close with them. These are people that receive a lot of foreign people. I mean, the reception desk, and they started as guards, but they had to learn a lot of stuff about welcoming people and so on. So
he was trying to learn English, right?
This guy was trying to learn English, and yeah, we do some training with them. We hear a lot about what they have to say. We learn a lot about them. There are always problems in a building, any building, and they handle it well, but it requires a lot of training also.
Well, Juan, it's been a big day. Thank you for showing us around, your developed properties, as well as the one you're working on, and answering a lot of the questions our guys have about development and buying off the plan in Paraguay. So if the guys want to see what you're working on a little bit more, you said it was proinvest.com.py?
Yes.
And the Instagram was?
It's like at proinvest. PY also, and TikTok all the same, and I think Facebook the same.
Awesome. Well, thank you very much for today.
Thank you.
Yeah, absolutely. And guys, as well, if you want to know more about the residencies in Paraguay and how we can help you, in the description on this video, you'll see some details where you can book a call with me and the team. Thanks, guys, and we'll see you in the next video.